Buy now, pay later is a very, very interesting business model that I've never fully understood, that I'm trying to get more deeper into an understanding, and that I'm trying to also understand if there's a moat around the companies that specialize in buy now, pay later. Today on our Money Talk show, we had an entire segment where we had a bit of a debate between Tom and Justin, really talking about buy now, pay later. Tom is bullish on companies like AFRM that are built on buy now, pay later. They're down 80% from their all-time highs, but nonetheless, he believes there's a moat there. Justin really thinks those companies suck and they're more of a product, a feature, not a product. So I want to jump into this right now. Let's get into it. We're going to watch them debate, and then I'm going to give my analysis on their debate itself and kind of give my thoughts on what I think about buy now, pay later. Now, before we do that, as always, I have to show the introduction. So let's see the intro real quick, and then let's get into buy now, pay later, because you know the jokes in the intro are hopefully elite.
Welcome back to Money Talks, where today Lucid CEO receives a pay package of over $400 million, even as their stock craters. I guess they want to affirm his success by telling him to buy now and get results later.
Tell me that wasn't fire. Tell me that was not fire. If you get it, you get it. Put it in the chat. If was that fire or not? I think that was pretty fire. Okay, let's get into it.
Pay later and affirm. It's a unique business model. The idea that you don't have to pay for something immediately, you can split it up into different interest payments, and then the company can take some percentage of the cut as a result of creating the infrastructure in order for you to buy something now, pay something later. Apple, we saw, just copied Affirm's entire business model in the context of the Apple credit card. So let's start off with you, Justin. Are you bullish on Affirm and buy now, pay later startups? And do you think it is a product and not just a feature?
Tom likes to talk about farts a lot. And I can't believe that he won't affirm that this company is also a fart.
He kind of stole my joke there, but that's okay.
And anybody who holds this company is holding a fart, I believe.
Wow.
You want to talk about valuations that are kind of crazy? Valuation, it's trading at $9 billion, which is not meaningful because they are meaningfully unprofitable. They are going to lose half of
They're trading at 6.8.
Yeah,
okay, your obsession with price of sales is just wrong. We have to do another segment on that, okay? But
trading at
okay.
Yo, Justin gets so triggered about price to sales. He thinks like I think he likes price to earnings or EV to EBITDA, EV enterprise value to EBITDA as like the way you want to evaluate a company. Me and Tom are just like, probably price to sales is pretty simple, but then again, you know, it's like it's so I think we will have an episode about comparing what is the best metric to evaluate.
Okay. You compare Palantir price to sales with Affirm's price to sales, but Palantir has what, 80, 85, 90% gross margins? Affirm has less than 50% gross margins. So how is that comparable? Not comparable. So
because it's not a SaaS. I've never said it's comparable to Palantir.
Okay, but you're using the same metric that doesn't adjust for the fact that they have different margin profiles. So whatever.
No, it's a nice metric to get in. Look,
it's the only metric to get in with an unprofitable company, which is the reason why we do it with Lucid or whatever. It's like,
well,
I agree.
Look, they're not. Nobody says that the firm is profitable. The thesis is, I mean, they're making $700 million a year, and it's a hefty valuation at $7 billion. 10x is quite expensive. So with the firm, you obviously look at the data as is, and the data is not looking good, right? They're down 80% over the last 6 months, right? Short interest is very high. It's not Lucid level high, but like 13% short interest. So it's not in the best of positions, right? But they do have growth, which is, you know, it's not growth. I mean, it's not that complicated to get growth. The price to sales is not the cheapest. But look, it's a company that has quite a lot of advantages going forward. Beyond the fact that I like the fact that they're heavily institutionally owned, about 70%. Which is a good indication for me. They have a nice cash position of $2 billion with a burn rate of about 200 a year. Like, I think about it like a startup, though. Hold on. So I know why. You have to look at the firm a little bit like a startup. It's a very binary, 1 or 0. So $2 billion of cash, 200 burn rate per year. That means they have enough cash not to go belly up. Their growth is wild. Not going to talk about the growth. You know, they grew 400% revenues over the past 3 years. That's kind of a given. The problem with Affirm is the cost structure, is where they're getting screwed right now. So over the past 3 years, the cost structure is like insane. It's up 300% on cost of revenues. It's up 9 times SG&A in the past 3 years.
So why do you think buy now, pay later can be?
Well, that's aggressive. You run a startup, Amit. So you run a startup. So
that is true. I do run a startup.
The startup mentality, and I think the problem with the firm is people don't look at it as a startup. In the startup mentality, you invest everything you got in acquiring clients, which is what they're doing right now. And that's a risky strategy. And sometimes people fail. But look, their active customer growth year over year was 137%. They now have 13 million clients. Total transaction grew by 162%. Transactions from repeat customers are 81%. They have partnerships with Amazon, with Shopify, with Walmart, no longer Apple, right? With Stripe. They're ramping up. They have a lot of marketing expenses. I mean, it's kind of like you have to look at Affirm as this hidden gem. And the question you have to ask yourself is, what kind of a role would Affirm play in a recession? Because I think we all kind of agree that we're heading into a recession. So would Affirm...
So this is an interesting point that Tom makes. Is like, okay, well, if people need to buy now and literally pay later because we're in a recession, they don't have the money to do that. That's where Affirm plays a critical role. Now the question is, why can't they use other startups? And that's where we get a little bit more deeper into the data advantage that Affirm might have.
Be something that people would need in a recession to sustain an unsustainable lifestyle, so to speak, or would it take a hit like every other retailer? So that's the big question. So if you believe that Affirm plays a role in facilitating transactions for retailers from clients that cannot afford the products anymore as this buy now, pay later, then they actually make a lot of sense. Although it's a risky bet. I agree to that.
Yeah, I mean, so you said it. It's a venture capital style investment. It's a startup. It's burning.
It's a startup. I agree 100%.
Well, so is Lucid, right? And the only thing it's a lot more simple but high stakes theses.
Affirm has 10 times more revenues than Lucid in a year, and I guarantee you their CEO is not getting paid $600 million in stock-based compensation.
Well, because Max Levchin invented the company, so he owns the majority of it probably. So like
he's actually delivering results. He's going for the strategy. He's saying, I don't care about revenues. I don't care about profits. I don't care about margins. I'm trying to acquire as much market share as I can.
Yeah, Max Levchin already owns over 10% of the company. So regardless, so let me speak here. The Affirm story, and if you're going to make money on Affirm, is very, very simple. But it's you have to be right about it. Is the buy-in price going to leave you with enough upside if the product gets big? Now, so what is that? What actually matters there? So the valuation is like whatever, like right in the short term, the market loves hype stocks, and in the short term now, the market really hates it, and who cares? It's really what is revenue and profits going to be in 10 years. Now, I do not think that buy now, pay later has any sort of differentiation between Affirm or there was one bought by PayPal, Square, Afterpay from Australia. Apple's copying.
They paid $28 billion for that, by the way. So like this buy now, pay later thing, I didn't know it was that big of a deal. Apparently, it's a pretty big deal. Companies really like if you have the ability to generate this type of credit card like payment cycle, which is what I think buy now, pay later is. It's a credit card. Then I mean, it seems like it's valuable.
This is
Klarna.
like Klarna, exactly. And
Klarna's valued at $46 billion, by the way.
And I do believe Affirm's big, like it has some concentration in certain like vendors, but I do not think that. I think it's a feature, not a product. It's something that Amazon can just like. Amazon is slowly, quietly launching Amazon Pay and like trying to proliferate that, and then you can it's just a feature to add. Buy now, pay later, or pay in monthly installments has been around since like before I was born.
That is true. It does not.
No, but the strength of the business is the information. It's like it's not about allowing people to pay.
As you see my face, I was like, "Are you sure? What's really the data advantage here?" So we'll get into it here.
Payments or installments. The question is how you price it and how do you manage risk.
No, the price is like zero. It's like a 0% loan.
Yeah, there's not even late fees.
There's no late. Yeah,
for a retail provider to offer a client an installment plan, you have to assess risk, and because you don't want to essentially give something away for somebody who's going to default, right? So that part of the information, that's where they come in, and we have the data, we have the risk assessment to tell you which clients are less likely to default. And
is that data that transformational? We haven't had credit card companies.
Look, the question is who has the data now? The retail providers, they don't have the data because it's not their business. They're not in the business of risk management, installment payments.
Yeah, their sales pitch is. You will see a sales increase if you offer buy now, pay later. Now, it's not if you offer Affirm, it's if you offer buy now, pay later. That's my issue with it.
And that's the differentiating factor here, right? So Tom is trying to be an Affirm bull and say the company can do well. I think that's a little bit harder of a position for him to have. And now they are the best buy now, pay later company in the context of like the most specialized for that is their business model completely. So if you're going to bet on buy now, pay later as a concept, you would bet on Affirm. But Justin's argument is like, well, it exists in other places, right? And so the thing I'm trying to get at here is like, if a company offers you, like Amazon offers you Amazon Pay, you're allowed to buy something and pay Amazon in 4 interest payments later, or not interest payments, just 4 payments later. Like doing that with a firm, and Amazon and a firm have an exclusive partnership for a year. Does a firm's specialization in the data that is required to facilitate the infrastructure for that transaction offer a massive substantial value to the point where it can grow as a public company on its own? The leadership of the company, Max, he's an amazing guy, amazing founder. The question is this truly something that can stand on its own? Maybe, maybe not. But I think that's the debate if you're thinking about these buy now, pay later Affirm type of companies. They can also expand into a lot of other areas in the fintech world. It's just a question of like, is the buy now, pay later thing the biggest, most important thing?
They could be one of 50
Affirm is very
vendors.
different than the other guys because they're not trying to screw you. With the other guys, they're trying to get you into late fees and payments and hidden fees to get you to default and be late, and that's how they make money. Affirm actually makes money when you don't default. And
Yeah,
you
but so
actually
does
pay on
Klarna,
time.
and so does Afterpay, and so does some of these other ones, right?
So that's a question of execution. Who does it better?
Yeah.
Who aggregates data better? Who manages
And
data better?
Affirm
So
is
far-
the only one that's public, or is Klarna public too?
Klarna's private.
I don't know.
They just raised that a
But
down
look,
round,
the-
actually.
We have about a year and a half to find out since Amazon, I think, has an exclusivity deal with Affirm. Let's see how good they are in the year and a half they have with Amazon.
Yeah, I don't think it's an attractive bet at this point.
All right. So that was the little debate that we had. What are your guys' thoughts on buy now, pay later? It's an interesting idea. I've stayed away from Affirm. I remember seeing Affirm at 90 when it came down from like 150. And I was like, man, 90 sounds great. I also thought Palantir sounded great at like 23, 24. So nonetheless, those are my thoughts on buy now, pay later. Hope you guys enjoyed that debate. Still probably not buying it. I don't really understand what the value of that data is to give to retailers. I mean, obviously it's valuable. The question is how much more valuable, how much more will it drive sales for retailers, and how much more will companies that specialize in that actually benefit from being able to provide that data and aggregate that data and give that data to those retailers. So thank you guys for listening. Let me know your thoughts in the comments, and I will see you in the next one.